Okay. And just we're talking when we're talking about the trust and being able to go with job keeper.
Yep.
We know that whether you're a trust business or partnership, as I believe, if you are paying PAYG, you are entitled to the government, which was part of the first stimulus package, the cash injection. So you can get the job keeper if you draw on the as a director's fees. You should be eligible for that if you fall between the 30% of loss of income. However, if you're not PAYG registered, you can't be qualified to get that cash injection. Is that correct?
Yeah. So that's I think that's one of the technicalities that I think a lot of people are getting caught out on now. So I'm just going to kind of go back and step through this, and this is where we should be and why we should be all right, but why we might not be. So single touch payroll, it's this thing that came in about 3 years ago. And the idea of single touch payroll is that when you pay your employees, you report that directly to the ATO. It happens at the time that you do your payroll, you run your payroll, you press a button, and it tells the ATO who's being paid. Now, this is going to be quite important for anyone who's going to be trying to claim the JobKeeper allowance or the JobKeeper payment. It's going to be based on single touch payroll. Probably the exception to that is going to be your sole traders or your partners in a partnership who don't employ staff. But for anyone who's employing staff, including themselves as directors of a company, or as also they might be employing themselves through a trust, they really should be onto single touch payroll. Now, it was law that we were on single touch payroll as at the 30th of June last year, unless you are what's known as a closely held entity. And a closely held entity means it's just yourself and possibly, another member of your family or your direct family that are being employed in that entity. And those people have an exemption until the 30th of June this year. And by then, they're supposed to also be on single touch payroll too. Now, what that's meant is for people who just small companies who just employ themselves, they've probably been taking directors' fees or drawings or whatever you want to call it. And at the end of the year, the accountant goes back and says, right, let's work out how much you've earned and let's pay you tax on that now. And we've never really reported anything. Now, really what we should have been doing all along is reporting at W1 and W2 what you're drawing and withholding some tax for it. And we possibly haven't been doing that now. If you have been doing that, whether you're using single touch payroll or not, and you have been reporting at W1, W2, you'll get that cash flow boost. And that's what we really want to get, because that's a minimum of $20,000 or $10,000 now, 5 and 5 next year. You really want to get that, and you want to see if you can actually somehow go back and register yourself if you haven't already. If you have been registered, you really should be putting a figure in there. If you are taking directors' fees or drawings, you should be reporting that. I would also highly suggest you get on and get yourself onto single touch payroll ASAP and start using that. Now, if you're using Xero, if you're using MYOB, if you're using QBO, they've all got very, very cheap alternatives to get you onto single touch payroll. So look at them and get yourself onto it. Take the time to get yourself sorted with this now. If you can report at W1, W2, or even W1, you're going to get the cash flow boost, and you can also get JobKeeper. If you're not reporting wages anywhere around the track, then you're not going to get cash flow boost. You can only get JobKeeper. So I'd suggest you talk to your accountant and see what you're doing. And if you aren't reporting W1, W2, so if you're not reporting wages as a company director or you need to find out why you're not, and you need to get it sorted out now. I also will let you know that there was a little bit of time there where the ATO, when they first announced this, they took off from the ATO our ability to go back and register you backdated for W1, W2 for PAYG withholding. They've actually put it back on now, but I would also suggest that you have a pretty good reason for doing it, because again, integrity measures. Why are we suddenly doing this now? I think you just need to go back and think, but if what you're actually doing is drawing money and calling it wages later down the track, I think you probably just need to say, well, I just didn't know I was supposed to do it, and maybe claim a little bit dumb there or something. I don't know. But if you can get that cash flow boost, that's what you want to be getting.
Fantastic. Okay. And what's the max of that? It's 20 to
Yeah.
250, was it?
No, no, it's to 100. So the minimum is 20. So
Yep.
if you withhold nothing, you'll get a 10. But you report wages, you'll get a $10,000 payment on your March BAS
Mhm.
as a minimum, or a $10,000 credit on your March BAS, I should say, which will offset whatever is payable on that BAS. And then you will also get a $5,000 one in June and another $5,000 one in September. Now that goes up depending on how much PAYG you're withholding. And so clearly, if it's just probably you and yourself, like you're just employing yourself, or you've just got one employee, you're not going to probably go that much above $10,000 in a quarter. But if you're employing a lot of staff, it can go up to $50,000 in the first half of the year. So whatever you report in March, April, May, and June, if they reach the $50,000 mark, and there's quite a lot of information in this, so I won't go into it in too much detail, but you can get up to $50,000. Whatever you get in that first half of the year, you get the same again between June, July, August, and September in the BASs as a credit, whether you're withholding tax or not. So there's potentially $100,000 coming your way, probably more likely 20,000.
Wow. Okay. That's a good incentive. Sorry,
Yeah.
to really get that going and get onto that single touch payroll.
Look, I also think, the ATO want you to be on single touch payroll, and a lot of people have tried to avoid it. They're scared of it for some reason. This is, it kind of reminds me back of when they did that $900 payment back in the, I don't know if you remember, in the global financial crisis. And
2008, I think. Yeah.
yeah, and they gave everyone who'd paid tax or lodged a tax return and paid tax in the previous year a $900 payment. It was amazing how many people came out of the woodwork and lodged tax returns that hadn't lodged for years and years because they wanted their $900 payment. Now, from the tax officer's point of view and the government's point of view, it was a great way to bring people back into the tax system. And, once they'd found them, well, they're in there. Now they've got to pay tax, So, and I think with this is even though that's not the motivation for it, I think deep down they'll be like, right, well, this is an amazing reason to make people go onto single touch payroll. We've been telling them to do it. Now we're going to kind of force their hand at it. If they want to get money from us, they're going to have to go onto single touch payroll.
Yeah. Okay. No, that's brilliant, and yeah, there is a big incentive to do that, and ultimately we have to do it anyway.
That's right. And it's not difficult. I think the difficult thing is that you do have to then start to regularly pay yourself. And, maybe this is a good opportunity to get into that. Our regular pay might be $750 a week. That's what it's going to be. But get yourself into that habit of, if you are trading through a company or a trust, that you do take a regular paycheck and you kind of treat it that way. So you actually take the money out of your account, and that might be difficult right now when no one has money, but later on down the track, when you're back working, take the money out of your business account and put it into your normal everyday account and use that just like you would if you worked for someone else, because that's what you're supposed to be doing. And I know we don't always do that, and it's so easy just to use the company card to pay for stuff as we go through the checkout or whatever, but we really should be trying to budget and manage our cash a little bit better and a little bit more sensibly. And I think this will help you if you start to get into that habit. I get that $750, I take it out of the account and I put it into my everyday account that's not in my company name. And even if you're a sole trader, you should be doing that too, I really think, because it's a great way to budget.
Okay,